You know how drawing trend lines manually can be time-consuming, subjective, and let's face it, sometimes a bit of a headache. You're trying to connect those pivot highs and lows, watching for resistance and support levels, and sometimes those lines just don't seem to fit. And then there is the challenge of keeping track of when a trend line is breached. Well, say goodbye to those manual trendline problems. I found a new indicator on TradingView that will do all the work for you. This tool is called the Trendline Pivot, and it automates the process, ensuring consistency and accuracy, all while saving you valuable time. It not only identifies and draws the trend lines for you, but it also alerts you when price levels breach a trend line. Plus, it even differentiates between active and breached trend lines by changing the line format. So stay tuned, because in this video I will show you how to use this indicator correctly to start making profits from any market. Before we start, if you're looking for easy to follow trading tools with a proven win ratio of over 80%, Easy Algo offers exactly what you need. Most traders end up losing money due to lack of emotional discipline and not having a backtested strategy that works. Easy Algo takes the guesswork out of trading, giving you real-time, non-repaint signals so you can accurately identify profitable entries and exits. Easy Algo is trusted by thousands of traders. It is legit. I strongly recommend it, not just for the tools you get, but for a private community of professionals where you can chat and learn trading a lot faster. Check it out, I'll leave the link in the comments. So how can we add this trendline indicator to the chart? Simply click on the indicators and search for the Trendline Pivot tool by QuantView. The Trendline Pivot Indicator is a tool that automatically draws and identifies downward and upward trend lines. These trend lines originate from and connect pivot highs or pivot lows. They serve as potential points of resistance for downward trend lines and support for upward trend lines within the market. Once a trend line is identified, it continues to be drawn and progresses with the price until one of two conditions is met. The first condition is the price closes above a downward trend line or below an upward trend line. When this happens, an X is displayed, signaling that resistance or support has been broken. The second condition is when the trend line reaches a user-defined maximum length. When the price closes above a downward trend line or below an upward trend line, the trend line transforms into a dashed format. This transformation allows for clear differentiation from active, non-breached trend lines. The Trendline Pivot Indicator is fully customizable. You can modify line colors, pivot length, and the number of lines you wish to see on the chart. You can also set the maximum line length. If, let's say, you set this number to 100, the trend line will disappear if it doesn't get broken after 100 bars. The indicator works on any time frame and in any market. There are various strategies you can try with this tool. For instance, you can buy when an upward trend line is breached. A trend line breakout to the upside indicates strong bullish momentum. Just take a look at these latest buy signals. The timing was definitely good. Conversely, you can sell when a downward trend line is broken, just like it happened right here. By the way, we're currently looking at Bitcoin on a 5-minute chart. You can even use the higher time frame to confirm the signals given in the current one. For example, we had a buy signal in the 5-minute chart, but if we look at the 4-hour, we see the trend reverses. So definitely not the best time to buy. Another strategy you can try with this tool is a pullback to trendline strategy. This one involves buying the stock when the price bounces off the lower trend line without breaching it. In this case, you would buy somewhere here. This strategy is much more accurate than the first one. Its winning ratio is around 55 to 60%. However, this is if you use the indicator alone, which I do not recommend. As you already know, the more confirmations you have, the better. You can use different oscillators with this tool, such as stochastic, RSI, or even Trendilo. Trendilo is a very interesting tool I recently came across. It is designed to help you spot price trends. By calculating the percentage change in the selected price source, then smoothing this data, the Trendilo indicator provides a clear picture of market trends. Following this, the indicator employs the Anord-Legué moving average, or ALMA, to the smoothed percentage change, providing a level of analysis that can help isolate valid trends from market noise. The ALMA values are then compared to a root mean square band. This band represents represents the expected range of the ALMA values, acting as a benchmark for trend analysis. Depending on whether the ALMA is above, below, or within the MES band, the trendy low indicator identifies the trend as upward, downward, or sideways respectively. In my opinion, this indicator is more precise than the regular RSI as it considers market volatility as well. It also offers more customization options. For example, you can change the smoothing, look back, ALMA offset, multiplier, and more. I prefer to keep the look back period at 30 instead of 50. So how can we combine these two indicators into one strategy? Since we determined earlier that our strategy is to buy when price pulls back to the lower trend line, we can use trendy low to confirm the reversal. The reversal is confirmed when the indicator becomes oversold. This must happen during a pullback, and when the line turns from red to grey, this is a signal to buy. The stop loss can be placed below the trend line. The optimal risk-reward ratio is 2:1. As we can see, the market didn't have any problem hitting our target. Right after this long trade, there was another buy signal. Literally the same scenario. Price returns to the lower trend line, the oscillator crosses the lower band, 1 bar later it crosses back up, signaling a potential long entry. With this type of price analysis, you don't even need a long-term MA to confirm the trend. You can simply check the price action on a higher time frame for additional confirmation. By the way, if you are looking to automate this or any other strategy into a trading bot that will be earning you passive income while you sleep, Pinex GPT is the service I recommend. It is absolutely free. You can ask it to create any strategy from scratch or choose any of these pre-made ones. If you're too lazy to create your own strategy, you can simply copy someone else's strategy. On Pinex GPT, you can find dozens of trading signals available to copy. Some of them are free, some of them are paid. On some of them, the ROI exceeds 1000%. Which is pretty good. Pinex also offers plenty of deposit bonuses risk-free. I've been using this exchange for a while now, and I can say with confidence it is one of the best ones out there. Anyway, I'll leave the Pinex link in the description, feel free to check it out. In order to sell with this method, the following must be met. First, the price must retest the upper trend line without breaking it. Second, during the retest, the trendy low must become overbought. If it does, then wait for the line to turn from green back to grey. That'll be your final confirmation. Set the stop loss above the trend line and target twice the amount you risk. Let me know in the comments if you have any suggestions about how to improve this trading strategy. Just be careful, there are plenty of bots out there. Anyway, thanks for watching and till next time.